All right, welcome back from the episode of Carnivore Trades. Today is Thursday, October 27, 2022. Not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, here, down day in the markets, down 0.5%, and Q's specifically getting crushed here after hours. Amazon getting destroyed here, down to $90 a share. That's real. It's really settled at about 4:20 p.m. Apple typically reports around 4:25, 4:30, so I'm going to attempt to take you guys into that, as that is trading lower as well. That got down to about 140, 141. Yeah, 141 and change. It is bouncing a little bit here. Now, no bones about it. Market's getting crushed here. Big tech earnings just getting decimated right now. Now, Apple could come in with the save here, and I'll tell you why. I think it's possible this market can bounce back even with this really awful earnings report here. So a couple of things. And first of all, Apple, the bar for Apple now is absolutely at the floor. So that's one thing. And again, I don't know what the report is yet. We'll go into that afterward once we see that earnings have come out. But the bar is absolutely at the floor right now because you got Tesla, Google, Meta, or Microsoft. And now Amazon reporting terrible quarters here, or at least the market just not responding well. So the worst is basically priced in for Apple. But beyond that, we take a look at some just break down market down a little bit here. The VIX here is not really doing a whole lot. Yes, we're getting a nice bid here last 10, 20 minutes, but we're not even at the highs of the day. And even before the report came out, or before the bell, VIX was kind of soft all day long. It was really red all day long. Again, second day in a row that it's down, or was down earlier, with a red market. So that doesn't indicate that hedges are going on. Obviously, it indicates hedges are going off. You have to think that, big money, if they were really worried about earnings, they would be hedged. They wouldn't be removing hedges, right? Now, the VIX is into a pretty decent area of support. Don't get me wrong. I think 26 is a little bit better, but it is getting a little bit of a micro bounce now off of that level. But another thing, really, so far, we're trading down to about 374, 375 on the spiders. But so far, this is still, you have an up move and then a possible, today was an inside day up until after hours, but it's a pullback pattern. So it's not like we're seeing high volume dumping. We didn't see high volume dumping, front running, selling. Let's take a look at Apple. Okay, so nothing there, but this market was dipping a little bit, but it's not like we're seeing high volume selling. But really, the most important thing, this is by far the most important, bonds. So the 2-year is back above the 20 moving average, and it has actually surged here in the last half hour since Amazon reported. It looks to me like the market is taking this as a weakening economic indicator, right? So we have data tomorrow as well. And if we're following the trend here, I think there's home data tomorrow, and I think there might be a consumer one too, but there's home sales or pending home sales, I think, tomorrow. If we're following the trend, that data is going to be weak. The market's going to like that because that means that increases the odds of the Fed's verbiage changing in the next Fed meeting next week. And we're not seeing just the 2-year, but also the 30-year getting a bid as well, not just today, but in the last half hour since Amazon. So again, can't make any bones about it. This is a pretty bad move here, but in the near term, I think the market can still recover here. And I know that sounds like crazy talk, but it is possible. You still have that inverse head and shoulders. Market was overbought into the 50 moving average. We went up into the 50-week moving average. And again, just before anybody starts, getting ideas, I'm still bearish the market. I just think in the near term, you had a lot of bears come in. We put in a significant low there on the CPI number. We had an inverse head and shoulders trigger. And I didn't see, I'm not seeing hedges come off, or I'm not seeing hedges go on. I see them come off, and I'm seeing bonds bid. So that could be a little bit of a tailwind here. There's also the Fed blackout right now. So we don't have Fed speakers to come into the market and start pushing the market back down and talking about, we're going to hike rates, we're going to hike this, inflation this, inflation that. So again, like I've been saying for a while, big picture, we're going lower, and I have a pretty good idea of when that will happen. But near term, I still could definitely see a move up here, or at least the market kind of holding up. I think specifically until the election, that is likely to happen. It does seem like they want the market to be up into the election, and a lot of other things. They've pushed crude down. We know that. Nat gas definitely got pushed down, which, by the way, we did exit today for a really nice gain on the second half of that position. I would consider re-entering this on a dip, though. We had a little contango issue with Boyle and the vehicle we used because contango affects those ETFs, but we got right into that 20 moving average and we filled the gap today. So nice move there for nat gas overall, but I still think this area here on a pullback can be bought. But overall, yeah, pretty ugly earnings season here. That is out of the way now, and I think, again, there's still a chance that the market could look forward to the next sort of meeting, and the market's going to look at it and say, well, big tech earnings sucked. Economic data is starting to turn down, so the Fed may change their verbiage a little bit, which could give you, the scenario, the juice to push up into the election. At least that's a thesis. Again, I'm not saying go and buy the market right now, but at this current time, I'm still pretty neutral, all things considered, although big picture is still bearish. Now, just because bonds are bidding, like I say this every day, just because bonds are bidding and the 2 years gotten back above the 20, it doesn't mean that it's out of the woods. Okay, you got above one resistance area, and even back here, you did get above the 20 a few times. Nothing goes down forever in a straight line. So maybe you can rally up to the 50, maybe you can rally up to this previous pivot. But that doesn't really change anything big picture. 30-year, again, still below the 20 moving average. So there's nothing to say that this can't go up here and get rejected and come back down. So again, don't get the wrong idea. But I am taking a bit of a contrarian approach here to the market right now, just because it's so easy to jump on. And then another thing too, the market surged up even with terrible tech earnings, and it's actually held up the last couple of days even with terrible tech earnings. So I got to think that if it hasn't come down now, is it really going to be a sell that? I just don't really see it being a sell the news. Honestly, I think we already would have started selling. But again, I could be wrong. I'm just throwing some ideas out there for you. Market is bouncing back a little bit here. Apple doesn't look like it's doing anything just yet. We'll take a look. Yeah, it's still just kind of holding the lows. So we'll check back in on that. Semiconductors did show a little bit of relative strength today, so down 1.25%. But take a look at Intel after hours, getting a bid, got all the way up to the 28 handle. It's still positive now after hours at 27.50. So that is helping out the sector as well, although it did get rejected again at that 190 area. So again, a little bit of a failed attempt to get above 190 again, but again, it's stalled out right at that 20 moving average. So again, if this goes sideways a little bit longer, there's nothing to say it can't set up for kind of an ABC up, zigzag up pattern there in the semis. But overall, got to watch that 190 area. IGV, that was green. I believe Atlassian reported. So Atlassian was up. Datadog, I think they reported yesterday. ServiceNow had a big gap up, so that was really the culprit there. So up 13.5%. So IGV, a strong sector today, up 61 basis points on the day. Dow Transports here, just a little bit lower, like everything else, getting rejected off that 100 moving average again. Yesterday we talked about that gap fill, and again we closed above that trend line, but no confirmation today. So Dow Transports, nice move here, but nothing to say that it's on breakout right now. But yes, it is pulling back off of that level. Again, we mentioned interest rates, 10-year here, closing back below that 20 moving average. This is the yield, so that's the first time it's done that since August 15th. So again, there's nothing broken on it. There's still an uptrend, but you do have a little bit of technical weakness here in the short term. So again, that could provide some gas for the market. Same thing with 30-year here coming in, still above the 20, but again, coming back in off the highs. So again, seeing bonds bid a little bit here. And again, you got to watch for these things, as they will give you clues as to where the market wants to go. XHB, a bit of a nothing burger today, up 38 basis points. Again, it was up in a down market. ITB, same exact thing, so up 22 basis points. Weekly pattern is still the same there, so we'll continue to watch that moving forward. And VNQ also green in a down market. Again, this one was really oversold, so it is due for some backing and filling to the upside. All right, XLF here. So financials has been a powerhouse lately. JP Morgan has been really on fire here off of the lows, going all the way up to that 200 moving average. Is very extended. It is into resistance. You just got above this pivot, but now you're going into this failed kind of bull pattern here. So that will be a lot of resistance. A lot of bulls are trapped in there. And again, that 200 MA overbought into that. So JP Morgan likely to pull back here, and that does make up a good part of financials in the XLF. Again, didn't quite get up to 30. Yeah, cut up to 33.73. I said 33.75 would be your area. We got up basically up there and pulled back. Had a little inverted hammer there on the XLF. So it did pull back off that level, and you can see here, this is your gap down, and then you rallied back up and then got rejected. So that's kind of your resistance area. That's what I was getting that off of. But you can see XLF pulling back here on the day. Broker dealers continuing higher though. Nice move for XBD. And looks like it wants to test that 460 area. But overall, XBD strong in a weak market, up 1.5% here. Let's take one more look at Apple. Okay, so Apple getting hit. Interesting. All right, so 137. That's basically right down to this pivot here. That was the CPI low. Nice dump there. Not a ton of volume yet. So right into that CPI low. See what it does here. ES. Okay, so this is an area I'm watching on the ES as well. So you've got that 50. This is a 4-hour, 200 moving average, 50 moving average, head and shoulders neckline, and then you have this channel here. So it'll be interesting to see how it responds into this level 37.50. If that can hold, again, that's your thesis there for the market to recover. So we'll be watching that. We watch that very closely, especially tomorrow. But we'll take a look back here, and then we'll get back into this towards the end. But let's flip over to crude. So crude, really kind of an inside day up, we'll call it. Actually, well, no, it got above. Yeah, it got above yesterday's high. So yeah, crude doing pretty nicely here. It is back above this trend line, so showing some relative strength. Again, I figured big money would front run the election and front run ahead of that. This doesn't look like any sort of power breakout to me, though, so I wouldn't still rule out a little bit more of a pullback here. Usually when you break out, you want to see a big impulsive move, and we had kind of one yesterday, but not a lot of volume, and you didn't see follow through today. I mean, it's up today, but it's not, you got a little doji, spinning top kind of doji there, so it's not decisively pushing through. If I see that, then you'll know that crude has bottomed here. But, crude showing, again, relative strength, as is XLE. Energy continues to be strong here. It did pull back off the highs. I think this is getting ridiculously stretched at this point. We talked about this yesterday. OIH up 50% in the last month. It did finally finish red today. This is wickedly overextended. Exxon and Chevron report tomorrow. Take a look at this trend line on Exxon. So that has been a good sell area there. And Chevron here as well, basically right up into double top before pulling back. So what I'm seeing here with XLE and Exxon Chevron is they basically priced in they've priced in a home run. Now they have to hit a grand slam to justify being up here and to justify further gains. So I think they're really extended. They need to pull back. I think we'll probably see some profit taking, especially if we gap up tomorrow. So I'm a little bit short-term bearish here on energy stocks. Long-term, I love them, but right here, this is just, it's getting a little absurd. You can see XOP reacting off that little double top there as well. So got a nice bearish reaction there. That should pull back in. And same thing with OIH. You saw that finish negative. Again, we filled this gap up here at 300. So again, I can't rule out a move back to 260 on the OIH. In fact, that would just be testing your previous breakout. So I think that's probably where it wants to go here over the next couple of weeks. But energy's still holding up really well, and that's really been carrying the market. I mean, look at XLE right now over the last couple of weeks, and then you look at the triple Qs, not very good, right? So XLE is still a strong sector, but really overbought here in the short term. Nat gas. So we talked about this a little bit. We gapped up because of the contango rollover right into that 20 moving average. We filled the gap today, so this is holding up okay. I still like it around that 550 handle or any sort of pullback. I think nat gas is in good shape here for on the long side. Anyways, flipping over to the dollar green again. So we talked about this upsloping trend line, 50 moving average, and everybody yesterday is, and the last couple of days really, like talking about how, oh, the massive dump in the dollar, this and that. I'm like, this is not really a massive dump. I mean, we haven't even broken trend really. I mean, yeah, it's been down the last couple of days, but on the weekly, this is just a pullback. This is just a test of that green bar low here, and you haven't even touched the 20 moving average. So the dollar's still holding up really well. And again, this is part of your overarching, or should say my overarching bear case, that the dollar index is still holding that 109 area, 109.50. I've been telling you guys for a while, this is where, if you want to long the dollar, it's right in that area. So again, dollar index getting a nice bid here. Trend is still up. Definitely need to respect it here moving forward. Gold, again, a little bit on the weaker side. This is not really doing a whole lot, though. It's just kind of sitting in this range. We hit double bottom. We're not getting any type of V-shaped move off of it. So gold does look a little vulnerable here to some more selling. And I do think we will get a washout in gold. I've been telling you guys that for a while. Yeah, if this was going to be a bottom, you'd want to see real follow through here and kind of a V-shaped move, much like platinum, with that big V-shape up, and then the pullback, and then the higher lows, and then now higher high breakout there of that wedge pattern. So platinum, again, holding up well. This should get to 1,000. Silver is in much better shape than gold. Again, still kind of an inside day, so nothing really too new to add there. And then copper, just an inside day, but still a nice breakout yesterday. And that did confirm the breakout of that trend line yesterday. So anyways, let's flip over here to Bitcoin. So Bitcoin pulling back. Doge is actually getting a nice bid right now, a really nice bid. That's the reasoning, I guess, is due to Elon Musk and Twitter, the Twitter deal closing. I don't know. You're seeing some short squeezing. I don't know what's going on, but it's up another 10% today. It is pulling back off the highs. Bitcoin and all the cryptos were doing pretty well today up until really that those earnings, it seems. But Ether, again, the big level here, big level for all crypto heads should be watching this white trend line. Close below that tomorrow keeps that head and shoulders intact. So we're going off of a weekly close tomorrow on Ether. But if you can stay above that by the end of the week, that I give Ether a really good upside bias, and that should be a rising tide for all cryptos, and really kind of lift everything up. And then of course, Bitcoin you'd probably look to that 22,500 area. Anyways, let's see. Sorry, I just lost my mouse for a second. Hold on. Well, it doesn't look like, hold on, there we go. Okay, sorry about that. Okay, so here's the ES. Let's take a look. All right, so getting a little bit of a bounce here, and then there's that trend line I was just talking about. Let's flip over here. Yep, so right off that 50 moving average, what I just talked about a few minutes ago, 50 moving average and 200 on the 4-hour. Got that upsloping trend line there. So that's where we're bouncing. We'll see if that holds into tomorrow. Apple, nice bounce there. Not green yet, or at least to 4 p.m. close, but that is getting a nice bounce. And again, I don't know what the numbers are. I have no idea. I do this stuff live here. But again, like what I said earlier, you've priced in the worst, right? So to a degree, Apple has an advantage here because they report late, and Microsoft, Google, Meta, Amazon, Tesla all had terrible earnings reactions. So that kind of leaves the door open for Apple to be a buy the news sort of event. That's really all I'm looking at. Additionally, let's take a look at the VIX. Yeah, just kind of sitting there. Look at the VIX futures. Yeah, VIX futures coming in a little bit. Let's take a look at bonds. Yeah, bonds holding up, ZT and ZB holding up. So again, watch these guys. They'll tell you a lot. Watch the bonds, watch the VIX. And again, we'll watch that area tomorrow on the ES. That's so important right now on that 4-hour. So these trend lines right here and that head and shoulders neckline, if that holds, this market can consolidate and push higher. By the way, if we start to bid back up, you know how many shorts are going to be trapped down here? So that's something else to consider as well. Lastly, one thing I want to leave you with, Tomorrow's close, super important. If we manage to get above 3,900 on a weekly close, this market will go up to 4,000. That is almost a given at this point. Anyways, guys, going to wrap it up here. You guys take care. I'll talk to you guys all tomorrow. Come find me on Carnivore Trades. You guys take care.